On today's Hot Sheet, I'm discussing last week's housing market tracker, the update on inventory, Friday's job reports, and the latest inside the FOMC minutes. Today is Monday, January 13th, 2025. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Welcome into this new week here on the Hot Sheet as we kick off this Monday. We'll get into inventory as we always do. Want to start with exactly what Leonard is saying. Glad to see that you're safe there. Want to send thoughts and prayers out to everybody in California, specifically, obviously LA area, that is dealing with the ongoing wildfires. Thoughts and prayers going out to everybody there, and hopefully we can see a resolution and end sooner than later. So thoughts and prayers there. All right, we've got a bunch here to go over. And obviously, just going back to the wildfires real quick, there's going to be an ongoing topic in our industry around that. That's obvious. We talked about it a little bit on Knowledge Brokers on the 100th episode on Friday. Drop a link down below. We're going to be continuing some of that conversation this coming Friday with Lance Lambert from Resi Club joining the pod. Lance, formerly Fortune magazine editor, now with Resi Club. We share a lot of Lance's stuff here on the Hot Sheet. He'll be coming on Friday's Knowledge Brokers pod. We'll be talking about some of what's going on there. Leonard asked if Eric, the broke agent, is safe. Eric actually moved from Brentwood in the last week of December, ironically, about a half hour south. So he would have been right on the evacuation zone line there had he stayed in his old place. So kind of lucky timing there for Eric, but obviously a lot of people not so lucky. All right, let's get into our inventory update here for the week. What's going on with inventory as we look each and every single week. We're trying to get to a healthier place on inventory. I had a back and forth, as I tend to do lately, on X about, inventory was skyrocketing. And that's just obviously couldn't be further from the truth. I mean, if you want to look at certain pockets, obviously, of Southwest Florida or certain pockets of Texas, you can make the argument that inventory is moving up in a very rapid fashion. But even there, you're not looking at a crisis moment of inventory. You've got higher inventory than pre-pandemic levels. Buyers are in control. That's not the story in most of the country. Okay, here's the actual story. What's going on as we look at it every single week. Inventory actually dropped as expected from January 3rd to January 10th, fell from 635,000 to 24,000. We will expect this hopefully to start to stabilize as we look nationally at the active inventory level. Inventory for the same week last year actually rose from 499 to 505. So still a healthy 120,000 more than last year at this time. The peak last year was 739,000. So we've come well off of the peak. If we look back at what I like to look really that 2019 level, because that was right before, it's more indicative of where we can get back to right before 2020. You saw January kind of flat in 2019, and we're hoping to see the same, get past this week. Hopefully we get an increase. We've seen that in normal years like 2019, right? January actually came out flat, 817 to 815, not a big move down, then moved up to 825 and 827. We'd love those numbers. Of course, we're still, quite a ways from there. But we've moved down here from the start, 650 to 635, now to 624. The hope would be that we start to stabilize and hold firm, at this 6.25 level, until we can get into a, February, March timeframe, April, when we can start to add inventory to the market. If we look at last year, we held firm around 500,000 throughout the first 2 months of the year and into March. And then April, we started, in May, we started to see that increase. Now our increase in inventory lasted longer than in, most normal years. But we really need to hold this inventory that we've gained, hold the line here. We're starting 2025 with 27% more inventory than 24. So if we can hold that and then grow into those, traditionally later half, second half of the spring months, that put inventory in a much healthier position. New listings didn't really move the needle. We saw 44,600 plus over the last week. That's compared to about a 40,000 increase same week in 2024. We got to get through these first couple weeks because the holidays and the new year and all that, they can react differently. We saw that, in this with New Year's being in the middle of the week, we saw that difference here in last week's 18,000. We did have the bounce back here at 44,000, but we'll look for, continued progress on new listings. What we've seen the last week, again, it's not going to change anybody's lives. It's not going to, really show, show a lot of strength in new listing data early on. We want to build on that. We need some, week over week, brick over brick, slow growth moments here for new listings. Price cuts are higher than at this point last year, working on a 34% off of 34% price cut versus 32 last year, lower than 23 at 36%. And the one thing that's interesting here is we still have demand from mortgage purchase application higher than what we've seen, last year. Last year, obviously, we're coming off of a 24. Outside of these couple weeks here, obviously demand is really shot down. But if we look at what happened the end of 24 versus 23, we're seeing mortgage demand start to move up off of those all-time lows. Okay. So that's a positive sign. Now we haven't seen, any positive movement here. Again, we're going, early January is reflective of that holiday being in the middle of the month. But we're also going to continue to see this pressure on mortgage applications with where we're at on the interest rate and the 10 years really pushing that rate up right now. So how much of that pressure can we sustain? That's going to be the interesting part of this. The first couple weeks of the year, I mentioned this last week on purchase application data, isn't really relevant, but now we're going to start to get into, the second half of January, beginning of February. And that's when you'll see some of those high weeks on mortgage application data for the year, right? If we actually look at, what happened in 23 and 24, starting almost next week, we get those high pops on mortgage application data. You can see it at other points in the spring being higher than the rest of the year. You can track that back into normal years. Almost any given year, you're going to see end of January, February, really the most active months for, mortgage application data. So if we don't start to see that, is it just a waiting game to see if the rates move down? If that pressure compounds, that could lead obviously to, longer days on market for sure. And it can really lead to, maybe some pressure on prices as well if we don't get that buyer activity that we're expecting here coming into the spring market. Pending sales, while we talked about this last week a little bit with NAR's numbers, Altos research is just showing 1% now. So that number moving down in recent weeks, according to Altos, 1% more single family homes in contract than last year. And you see that in, 24, you really had a strong uptick, after this week on pending home sales. So again, that mortgage application data is going to be really important to see if we get that line to move up and to the right from really this point this week forward going into the spring market. This is when you would expect that to happen. And so next week is going to be really important for us to look at this, this now, what are we calling this? The third week, the third true week, or really the second full week in December, right? Yeah, because that first week was dealing with the holiday. So last week was the first full week. So second full week, we're totally on the other side of that. People are getting back, to what 2025 is going to look like for them. And next week's data is going to be really important to see, if we're behind schedule, if we're behind 24 and 23 schedule. Not great news, obviously, if that's the case. All right, we had some other not great news. The end of last week, that was from the Bureau of Labor Statistics. We saw that the payroll employment increased by 256,000 in December, and unemployment rate actually moved down 4.1%. Why was it not great news? It was not great because the markets responded negatively to this news because it beat expectations by a significant amount. Dow Jones puts out their expectations for jobs, and this number blew it out of the water. The market responds negatively to that. We're continuing to see the stock market now move down. We also saw the 10-year move up significantly on this news. And just coming into the 10-year today, I never like to see this yellow marker at the top when it has the word high attached to it. We've got a new 52-week high on the 10-year Treasury starting this week, 4.763. That's beating out April, May. If we go back into 2023, we're still under the 23 high, but a new 12-month high, 52-week high, as CNBC is putting it, on the 10-year Treasury. That's really in, obviously we've seen a move up on the 10-year here for weeks now, but this new high is in direct response to that job data that we got at the end of last week. If the job market's going to be and listen, they might revise this down in the future. Like the boy who cried wolf can only do that so many times. They can only revise these numbers down so many times before I look at the initial numbers like this report on Friday and say, baloney. It's going to get revised down in the future, but that's not how the markets respond. I talked to Danielle Hale, the chief economist over at Realtor.com, about this, and I said, why does the market react so significantly when this job data comes out, when we've been now conditioned month over month over month to see that these numbers end up getting revised down, that the government is always number 1, 2, or 3 in hiring, and that might go away, in now just what looks like, in a week from now, right? That might start to go away. And, Danielle Hale, chief economist at Realtor.com, says the market reacts to the data in real time. And so, investors are making, moves every single day. Where are they going to put their money? Where's the safest place to put their money? Where's the opportunities? Okay. And so when they get data like this, it tells investors, it tells people investing and looking at the market that, hey, inflation is going to be a harder, thing to get in under control. You've got, potentially some more fuel to the inflation issue, and they get nervous about that. And so you see reactions like we've seen in the last week. All right, we've got some reactions here from the FOMC meeting minutes. FOMC releases their minutes after their meetings, usually weeks later. We have another meeting in 16 days from the FOMC. The expectation, it's 98% from CME Group, by the way, that they will not do a cut. But what was inside of the, and these minutes just came out, I think Thursday of last week. So this is kind of those internal discussions that happen from the December 17th, 18th meeting. That was the last meeting where they did cut a quarter of a point on the federal target rate. Remember, Jerome Powell came out and said, hey, don't expect a lot of cuts. In fact, they changed their projection versus their September projection for 2025 cuts down to 2. They've now changed it down to 2. Previously, it was 4. So we had a number before that was 3. I mean, we're talking about 2 cuts now. This is inside in the minutes out of 8 meetings. So maybe that's a good thing, because obviously we've seen 3 cuts in a row now, and we've seen nothing but the 30-year fix go up. So maybe it's a good thing that they're not going to be cutting. But the indications here are that there will not be cuts. I'm going to go into our hot sheet show notes. These are available for BAMX members each and every single day. You can copy and paste this data and put it into the communications that you have in your database. Along with this is the charts that we use every single day. You get that inside of your hot sheet show notes. But that document that I just showed you from the FOMC minutes, that's a 17-page document. So I'm just going to go to the notes here that we put together for this show that you have access to as a BAMX member, to really break down the highlights. Here are the concerns, okay? And this is one of the reasons why we deliver these notes to you guys. No reason to go through a 17-page document when you can pull out what's important as it relates to housing, so you can have really good, educated conversations with your clients. All right, so number one, they've got a concern over these Trump policies that might be coming down the pike, obviously, after next week, after the president-elect Donald Trump inauguration. We're going to see what is what was campaign speech and what is actually going to be now put into policy. We're not going to see it on January 20th. I know he made a lot of day one promises, but that definitely, I would say, would be campaign speech. You got to give it some time, see what actually, gets through, what proposed policies, including the trade tariffs, which seem to be, one of the big issues here for the Fed. What actually is top of the agenda and what happens. So they have a concern over that. They're talking about slower rate cuts. Again, they're only expected to do 2 in 2025. They had 4 projected in September. So they're moving away from rate cuts. Typically when they start, they keep going. Doesn't seem to be the case here. You'd have to have some type disruption to the economy, some type of crisis-like event, predictably for them to change course here. Core inflation was at 2.4% in November, with overall inflation at 2.8%. This is still above the 2% target. The U.S. economy showed stronger consumer spending, a stable labor market, and above trend GDP growth. So the Fed's perspective is the economy is strong. The GDP, we're having GDP growth. And so they want to caution everybody, like, hey, we're not going to cut in this environment. We want to get inflation down to the 2% target. That's our mandate. And they believe that the U.S. consumer is still relatively strong right now. It goes against what you might be hearing from a lot of people in your community, but that's where the Fed's position is. They emphasize caution right now. Their policy outlook is that they expect the federal funds rate to reach 3%, with potential rate cuts extending to 2026 or later. So we could be in a prolonged period of slower cuts. Now, moving down, we've actually pulled out all of the instances from the meeting minutes that they, have some type of tie into housing. There's really one that I thought here was page 7, paragraph 1, that was worth having a conversation about, not worth overreacting to. Okay, I'm not trying to give any of the housing doomers on X, ammunition. This is not something to start worrying about. This is something for us on the hot sheet to start watching, being aware of. Also being aware that some of these headline numbers, might be brought up by a client. Okay. And so we want to start to track this. It's something that we need to be looking at. Okay. So in the meeting minutes, they say, regarding household credit quality, delinquency rates on most residential mortgages were largely unchanged and stood near historical lows. Okay. Most residential mortgages are at near historic lows on delinquency rates. That's an important, just put that in the back of your mind. Okay. Like, update the software and know that moving forward here. It's an important conversation piece when people bring up, instability in their mind of a real estate market. Hey, most mortgages are at historical lows for delinquency rates. What else do we know? 4 out of 10 homeowners don't have a mortgage. So, okay, we've got a lot of strong homeowners in America today. However, in the notes, the delinquency rate on FHA, Federal Housing Administration mortgages, this is borrowers with lower credit scores, smaller down payments. That delinquency rate right now is above pre-pandemic levels. So that's something to watch for, something to look at, something we want to track. We're not in the eye of the storm. We don't have a storm. We have something to track, something to look at. That's all I'm saying there. Okay. Delinquency rates on credit cards continued to increase. Also something I want to look at. Okay. There's a slower pace than earlier in the year on those credit cards, and delinquency rates on auto loans remain unchanged. All things we want to look at as we move through quarter one. I see a question here. When will the hot sheet be up for us to access? The notes get loaded to BAMX as soon as this show's over. So you can go back to any BAMX or any hot sheet, and we have the whole history of those show notes there. Immediately after this live show, you get these show notes, and those are going to be inside of BAMX for you. You can use code HOT to get today's discount on BAMX exclusively for the hot sheet folks. All right, let's take a look where cash is king here coming into this week. Zudilio helps us out, put together a list here on our Inventory Monday. What's going on with cash offers. Remember, 4 out of 10 homeowners don't have a mortgage on their house. Top 10 housing markets for cash offers for the week ending January 10th was Orlando, Las Vegas. Those are two markets that are continuing to see, a real interest from investors. Las Vegas, you could imagine, is going to see an increase here over this year. And in California migration, they already had strong California migration. So could definitely see Vegas continuing to move up. San Bernardino, California was number 3. Jacksonville and Phoenix round out the top 5. Mesa, Arizona, Las Vegas is on there twice. So I don't know if that's a typo. Maybe we'll get that updated before we put that inside of BAMX. Haley, if you can take a note on that. San Antonio, Tampa, Dallas. Let me just check and see. Yeah, we've got that as a typo in there. So see what's number 7, Haley. See if we can get that updated. But we had San Antonio, Tampa, and Dallas also on the top 10 for housing markets for cash offers. Okay, there you go on that. I do want to just, before we get to where the 30-year fixed is, here's something. And if you're an agent in that California, the LA region, you got a long road ahead of you to help serve your community. Really thoughts are with you. Thoughts and prayers, obviously, for everybody impacted. I know probably if you're in this business, somebody, an agent was impacted. This is going to be a conversation that maybe, we're not talking about as much, until we see the other side of this. But Wall Street Journal put up a piece last night in their economy section of the journal. And this is going to be a conversation that is going to be one that lasts for a while in our industry. Their wealth is in their homes. Now their homes are ash is the headline. Many of LA's middle-class homeowners bought properties years ago before prices exploded. I'm sure you've seen videos on some of this where you've got one of the viral videos, Lady Fran. I think she's owned the house almost 30 years, had all the grandkids, everybody there for the holidays. She was talking about, her house was up. She was standing in front of her house, which is no longer there. And talking about how her husband and her have just put everything into the house. So many people, when we talk about home, what we deliver as, a real estate community here, and we talk about what home means to people. Um, it's everything to a lot of people, and it is a lot of people's savings. It's everything that they own is put into it. That's where, a lot of people, they see it as a safe haven. And this is where people that are, anti-housing as an investment are going to start to argue. So like, these rare cases they're going to use that as ammunition. But a lot of people, when they consider what home means to them, it's putting their work, their heart, their soul into these places. And a lot of their, some of their retirement can be tied up into it. And, we talked about this a little bit on the um, hot sheet, or I'm sorry, on the Knowledge Brokers on Friday. Again, we're going to be make sure you subscribe to Knowledge Brokers podcast. We'll definitely be covering this as a segment moving forward on Fridays. What's going on? We have Lance Lambert from Resi Club, who has a ton of insurance data he's going to be bringing to the table. Talks to real estate professionals across the country, obviously founded Resi Club. We're going to be having that conversation this Friday. But here's some situations that we're going to have to deal with. Okay. This 77-year-old homeowner who's lost, her home, says that insurance would cover $800,000 to rebuild. Okay. The Palisades has an average value before a fire of $3.4 million. Okay. So, a lot, and we talked about some knowledge brokers, a lot of people's value from a couple weeks ago, unfortunately, is just never coming back. When you have a cost from an insurance is telling people $800,000 to rebuild, no chance can you build even a 2,400 square foot house. The Palisades and that area is not like easy. Like, it's not like the land I'm sitting on here in Southwest Florida, flat land, easy to get to, easy to throw up properties. It's difficult terrain to begin with. There's infrastructure issues. There's other issues, obviously, how fast can you actually, get these homes built and all that kind of stuff from a regulatory perspective. I know there's some campaign talk from the governor. We're going to open up the floodgates on regulation there and all that kind of stuff. We'll see how that sorts through. So $800,000 to build is just not going to be enough. I know the land has extreme value, but does it now? So these are all conversations that are going to be obviously difficult to have, but that the industry needs to obviously come to grips with on how to move forward. And $800,000 in the insurance is going to be a big topic. We're going to continue to talk about that. And this conversation that's in the Wall Street Journal, I'm bringing it up because it's in the Wall Street Journal today, is something that as we get it on the other side, we really need to dig into, try to help find solutions for, and we'll continue to do that and keep you updated. Obviously a little bit here, but subscribe to Knowledge Brokers Pod, separate YouTube channel. We just did episode 100. And again, we got Lance Lambert coming on Friday. 30-year fixed started at 7.24. This is highest level since May, I believe. We had the highest level since May when we touched 7.5. We saw 10-year today, highest level since on the 52 weeks. So 7.25 here to start the week. The Freddie Mac 30-year fixed weekly at 6.93 on the 30-year fixed, continuing to put pressure on this real estate market right now. A couple things. If Haley, you can put these links in as well. There's a couple things coming up. January 22nd, next week. If you want the new way to win more listings in 2025, I have a webinar happening on January 22nd to cover that topic. So the new way to win more listings in 2025. Gonna have a couple people with me. Somebody from Zillow, obviously Zillow's got more information than anybody on what consumers are doing online right now. And then another real estate professional along with me that's using a lot of this data to his advantage. So the new way of winning more listings in 2025, January 22nd, you can sign up to that webinar. I don't know, Haley, if you go into the article, Hot Sheet Show articles, you'll see the link there. And then second, we've got a BAM Pro Bowl announcement. BAM Pro Bowl is back this year, February the 5th. Last year, we had thousands attend that live event, totally free. BAM Pro Bowl. The lineup is incredible. Ken Pozak is coming to the he's going to be one of the speakers. Jared James is speaking at this year's Pro Bowl. This is Pro Bowl number 2. Last year's was a huge success. Tina Call and Kofi Nardi is also going to be speaking at the BAM Pro Bowl. Myself and Eric will be modding the BAM Pro Bowl, but grab your free ticket to the BAM Pro Bowl. We had over 4,000 sign up last year, and thousands concurrent viewers. I don't know if we're capped out at 5 or not, but make sure that you sign up, secure your spot today. It is free, so there is a cap on that. The only way to get the replay on that this year is going to be for BAMX members. So BAM Pro Bowl 2, if you remember last year's first BAM Pro Bowl, we had a live national anthem. We had Super Bowl like level commercials. We've got all that entertainment and more at BAM Pro Bowl 2. So make sure you sign up for that. You go to bamprobowl.com to sign up. All right. Here we go. Jason, very funny, Jason. All right. Hope everybody has a great week. Again, thoughts and prayers to everybody in California. I know the next couple of days is going to be a real challenge. And so hopefully they can get on the other side of that. Firefighters are doing everything they possibly can with what they have. So, really, hopefully we get through the next couple of days out there. All right. That's it for today's Hot Sheet. I'll see you guys again tomorrow live at 9:30, 6:30 on the West. You know the deal in between. Till then, toodaloo.